Welcome back to this afternoon at the Future of Food Conference 2021. We're in the final stretch now. We've had a day and a half of insightful and engaging conversations. So I hope everyone is ready and enthused for our final afternoon session, which is going to focus on investing in impactful solutions. I know so many of you have been involved in asking lots of questions and networking on the sidelines. So please do keep doing that. And of course, do keep sharing on social media using the hashtag FutureFood21. I'm going to hand over now to my moderator this afternoon, the very capable hands of Paul Adamson from Europe, who will be taking you through some keynote speeches and a panel discussion all about how we make the investment in some of the topics that we've been talking about over the last 2 days. So Paul, over to you. I leave you the floor. Take it away.
Thank you. Thank you very much indeed, Jennifer. Yeah, capable hands. Well, you're the capable hands, that's for sure. So as Jennifer just said, this session is all about investment, and we're going to be talking about what is working and what is not working in the EU's impact innovation landscape. And the aim ultimately is to mobilize action and resources to address the problem effectively. And we'll be addressing questions such as how can the EU play to the strengths and peculiarities of the European innovation ecosystem to create its own brand of innovation and achieve a leading position on a global scale, particularly in the agri-food sector? And how can investors contribute to the creation of a positive economic and societal impact in the European agri-food sector? And finally, what can EIT Food and its partners do to strengthen the EU innovation ecosystem and help agri-food entrepreneurs access the financial resources they need to launch and to scale up? To kick off this afternoon session, I'm happy to welcome two keynote addresses. The first will be from Carl Wellborn, who's Managing Director of the Yield Lab, whose job will be to paint the landscape of agri-food innovation investment in the US. And in a moment, I will also invite Caroline Chandler, Senior Consultant of Ipsos, to give the second keynote address. Before that, though, the floor is entirely Kyle's. Over to you.
Thank you very much, Paul. Hello, everyone. Thanks for having me today. As Paul mentioned, I'm a managing director at the Yield Lab North America. The Yield Lab is a global network of venture capital funds focused on agri-food tech investments. We have funds in North America, Europe, Latin America, and Asia Pacific, and I am on the North American team. I was asked to talk a little bit about how we're viewing ag tech impact investing in North America. So I have a few slides to discuss that here today. If you want to go to the next slide, please. The challenge in really trying to define a framework for any impact investment is that it's actually quite hard. When you start diving down and trying to define your impact, you start with a kind of endless soup of white papers by various governmental organizations. You also have a challenge specifically when it comes to investing in startups that the impact that these companies and these technologies will have is forward-looking. There are no, at scale, these technologies would have a lot of impact, but as a startup, just getting going, they're just don't have an impact yet today. And then finally, the other challenge is there are quite a few special interest groups that have their own focuses, whether that means eliminating animal protein or eliminating GMOs, and sometimes those don't always align with the impact that people want to have. Here's just an example on the right hand side here, a recent article from a magazine called Successful Farming, where Pat Brown, the co-founder of Impossible Foods, recently wrote a paper that said 56% of anthropogenic greenhouse gases could be eliminated by replacing meat with plant-based proteins. And then that's different than a article written a few years ago, published in the Proceedings of National Academy of Sciences, that had the number at 2.6%. So these big ranges that we sometimes find can make it hard to really define what impact really looks like. Next slide, please. So for us at the Yield Lab North America, we like to depend on other smart people to help us with this challenge of creating a real framework. And we've really leaned into the framework developed by Breakthrough Energy, which is a think tank spearheaded by Bill Gates and a group of some of the most high net worth individuals around the world, including Richard Branson, Jack Ma, Meg Whitman, Mark Zuckerberg. They have a staff of 80 people and have 5 areas where they're focused on getting to zero emissions. And they provide a framework which can be downloaded, which sort of helps make sense of, if we're going to get to zero emissions, what we need to do in that general area to make that possible. Next slide. So when it comes to agriculture, which globally accounts for 19% of anthropogenic greenhouse emissions, there's 4 key areas that Breakthrough Energy has identified where we need new technologies to actually get to net zero. And those core areas break down around soil and nutrient management, agriculture, methane abatement, alternative proteins, and food waste. Next slide. So while it is important to identify that globally this food and ag contribute 19% of greenhouse gases, in the United States, and if you look at the numbers in Europe as well, farming is actually a lot more efficient. So we do need to give some credit to the hardworking farmers across the world that have been able to do this more efficiently. In the United States, as an example, food and ag only produces about 10% of greenhouse emissions. And if we look at the data from 1990 all the way to 2018, it's really stayed quite steady. So the amount of emissions is not dramatically increasing, even though the amount of food being produced has scaled quite considerably. So we do need to give some credit to the innovations that have come before that have been able to make the food and ag system much more efficient. Next slide. So when it comes to food and ag, there's really 2 ways two types of technologies that can help us get to net zero. And what's unique about the food and ag industry is that while most industries, all we can really do is mitigate our CO2 emissions, because you can sequester carbon in the soil, ag actually has the unique opportunity to bury some of that carbon and actually take it out of the atmosphere. So when we look at how we're making these investments, we want to think about both mitigation technologies and sequestration technologies. Next slide. So when we look across our portfolio in the Yield Lab North America, we've made 32 investments in agri-food tech companies, and they break out across all of these 4 key areas of investment. We've done a lot in crop productivity, quite a bit in protein productivity, and then quite a bit in in-field food waste loss mitigation. We don't know much about cultivated meat production, although that's an area that's very interesting and hopefully will continue to grow. Next slide. So just some observations about this. We've seen a lot of technologies around soil and nutrient management. There's a lot of interest in microbial-based crop protection, and lots of money has been invested in that. But we are seeing challenges with repeatability and scalability with some of those microbes. So we're getting quite interested in companies that are able to identify either metabolites or some other small molecules that have biological methods of action, but can provide kind of chemistry-like replicability. On the methane abatement, we see a lot of interesting opportunities around here, although I would say much of it is in business models that aren't historically venture-backed. And so it's going to take some, I think, creativity to find startups and new business models that can allow us to invest in those technologies. Next slide. On the other 2 areas outlined by Breakthrough Energy, alternative proteins and food waste. Alternative proteins is the area that has gotten the most investment across agri-food tech. Lots of money interested in plant-based proteins. There's some data here on the right-hand side from the Financial Times, published this week actually, that while there's a lot of excitement about plant-based meat, at least in the United States, since April, we've actually seen a drop in sales month over month in that category. So while there's a lot of excitement, and this will be a critical part, I think, of getting to net zero, one thing that I think we have to acknowledge is there's still a lot of need to invest in traditional animal health and being able to raise livestock and reduce emissions. We don't see a ton of investments across ag tech in that area. The way consumers continue to buy traditional meats, I think that's really important. And finally, on the food waste side, we see a lot of digitization technologies, but really limited technologies, I would say, that can curb food waste via novel coatings, novel treatments, things like that. And that's an area we've been quite interested in. Next slide. So this will be my final slide, and then I'll turn it back over. But it's always important, to invest in things that have an impact, a positive impact on our planet. But what I wanted to show here is, in addition to that, companies that commercialize technologies that have important impacts are also being are being rewarded in the public markets. So here's a comparison. If you look at Beyond Meat, the public plant-based meat company, and compare their market cap and sales versus Tyson, every dollar of revenue Beyond Meat generates $17 in greater market cap. And that's quite a sustainability multiple, and it carries over to Tesla and Ford as well, where it's a 41x difference. So these are important technologies. We have to get to net zero. We're all going to need to work together to do it. And finally, as we're seeing here, investors are rewarding companies that are able to bring those technologies to market. Thank you very much, and look forward to questions later on.
Maybe a question now, and just to remind the audience, you've seen the ticker tape at the bottom of the screen. If you want to ask Kyle or our next speaker, Karen, a question, please use the chat function. I'll do my level best to address your questions to the speakers before the session finishes. A question to you, Kyle, if I may. It's tremendous. Clearly, everybody seems to be pushing in the same direction, whether it's the innovators, the markets, the investors. But how do you make sure that the people meet up with each other? Because the investors, maybe they can see either morally and societal terms the good thing to do, but also, as you said your last slide, it's clear dollars and cents return on investment, so it'd be a no-brainer not to do this. But then these often quite niche and quite small startups have to find you, and you have to find them. How does that kind of marriage bureau work?
Yeah, I mean, we are fortunate that we're getting lots of introductions to many startups. We track quite a few ag tech startups using Crunchbase and some other databases. But you're right. I mean, you have to drive towards that impact that you're looking for. And I mean, I think one of the challenging things as an investor is that this impact investing is now so popular that every startup is an impact startup, right? And it's important to sort of pierce through that a little bit and really understand, is this a technology that's really going to drive us to net zero, or did you take your social network, a new social networking idea, and just say it's impactful because it helps bring people together, or something a little bit more shallow. So I do think a lot of those claims need to be scrutinized because it's not a lack of startups wanting to have an impact. It's sometimes a lack of the technologies that really can get us down to net zero.
Yeah, and final follow-up, by definition, these are startups. They have maybe not got a huge track record to rely on. But you guys, with all respect, you're not scientists either. Maybe one of you, maybe you are, Carl, but you're investors. And I'm just interested to see how you again, how the conversation proceeds, where you're literally trying to speak the same language and look into the future. I mean, you say the returns on investment of mature companies are not that impressive, but at least they have a record to stand on, right? So these startups have a real real task ahead, trying to convince guys like you that what they are claiming they can do will actually happen.
That's right. So yeah, at Breakthrough Energy, which I referenced, they specifically make investments in technologies that they believe at scale can reduce greenhouse gas emissions by 1%. So that's what they've determined to be an impactful technology. That's quite a lot, which is why they've focused quite a bit on plant-based protein, because if you can take out that the emissions from animal proteins, you actually can make quite an impact. However, but so we kind of look at across those four areas, food waste, methane abatement, crop improvement, and then animal protein, and try to it is a guess, right? You're looking at it and saying, okay, if this really works and works at scale, would this be a meaningful reduction of greenhouse gas emissions? But you're right, there's some guesswork going on, but we're going to need those technologies to get there. So it's going to take a little bit of guesswork, is my view.
Yeah, guesswork, a good faith, and being risk takers on all sides. Clearly, I'll let you go, Carl, to make room for space in our session now for Carolyn. And by all means, in the audience again, if you have questions either for Kyle or for Carolyn, but before the end of the session, let's try and get those. I'll come back to you. There's a question that's come in now, but I'll give it to you, Carl, at the end when I'm referring from Carolyn. Great pleasure now to introduce Carolyn, who's Carolyn Chandler, who's a senior consultant at Ipsos, who's due to present to us the outcome of a study commissioned by the European Commission, due for publication in the first quarter of next year, on detailing the gaps of agri-food innovation funding in the EU. So we're all dying to hear what you have to tell us, Carolyn. Over to you.
Thanks very much, Paul. I hope I won't disappoint anybody with the study findings. But just as Paul mentioned, my name is Caroline Chandler. I work in the policy and evaluation team at Ipsos Mori, and I'm here to present some early findings from a study we've been carrying out over the last 12 months. So as Paul mentioned, Ipsos was commissioned by the European Commission, by the Directorate General for Research and Innovation in December 2020, to carry out kind of a review or a mapping exercise of investment in food systems at both EU and national level within Europe. Quite a big task for us, I would say. So as you mentioned, this hasn't been published yet, and we're still sort of verifying and finalizing some aspects. So the results that I'm presenting are not set in stone, but hopefully they should still provide some useful food for thought for the rest of the session. I'm just going to start with a very brief review of the broader policy context before running through a little bit what we did and what the main headline findings are. Finally, I'll have a look at some of the obstacles that we identified along the way and potential solutions that we've put forward to help with investing in a more sustainable and resilient food system within the EU. So next slide, please. So just starting with a little bit of background that sets the scene for our research. So the EU Green Deal was announced in 2019 with the aim of transforming the EU into a modern, resource efficient and competitive economy. Concretely, this means achieving net zero greenhouse gas emissions by 2050, decoupling economic growth from resource use, and then finally ensuring a just transition for all citizens. Specifically, research and innovation is seen as a key enabler of this transition. Within this context, and of particular importance to us, the Farm to Fork strategy aims to transform the European food system to become a global standard in sustainability while striving to supply healthy, equitable, and environmentally friendly food. So next slide, please. So the Food 2030 initiative is the main point of reference for our study. In brief, very brief, this aims to transform food systems through research and innovation and ensure that everyone has enough affordable, nutritious food to lead a healthy life. So Food 2030 identifies 4 priority areas for food systems research innovations and 10 pathways to action. These are designed to provide a framework for future-proofing food systems within the EU. Importantly, Food 2030 takes a systems approach to food R&I, which encompasses the entire food value chain from production, packaging, transport, food, through environment, consumption, waste management, and health. So it's really a very holistic view. It also considers the interdisciplinary and transdisciplinary nature of food systems, namely bringing in different actors across many different sectors, and taking a higher level view in order to achieve a transformation of the whole food system. So Food 2030 in this regard builds on the 2012 bioeconomy strategy, which also acknowledged the intertwined nature of food industry and climate change. According to the logic of the food systems approach, investments in food systems R&I are expected to deliver co-benefits for people's health, the climate, the planet, as well as sort of on a community level. In our study, we have tried to identify co-benefits by looking at the extent to which funding is targeted to more than one of the Food 2030 priorities or pathways. Next slide, please. So before we move on, there's just a couple of terms that I wanted to clarify, because I think it's useful to at least give you the definition that we've been working with. So the first of these is the concept of food systems, which I touched on in the last slide. Within our study, we've used a definition put forward by the Food 2030 expert group, which says that a food system is all elements and activities that relate to the production, processing, distribution, preparation, and consumption of food, as well as its disposal. So it really does kind of look at all aspects from farm to fork. This includes the environment, people, processes, infrastructure, institutions, and the effects of their activities on our society, landscape, and climate. So it's also this concept of a very interdisciplinary approach, which implicates all actors. The second sort of definition that I just wanted to touch on very quickly is the concept of food and nutrition security, or access to sufficient, safe, and nutritious food for current and future generations. And in a nutshell, ensuring food and nutrition security is one of the overarching goals of European food policy, and therefore one of the things that we're sort of looking towards in our study. Next slide, please. So our study was intended to map expenditure on food systems R&I at both national and EU level from 2007 to 2020 in order to provide a first indication of current funding levels, of how they map against the priorities and pathways within the Food 2030 strategy, and also, as Paul mentioned, to identify any potential gaps which may need to be addressed going forward. We did this broadly by implementing 3 strands of research. So in the first instance, we mapped and categorized the funding distributed at EU level via the framework programs, FP7 and Horizon 2020. We focused on the framework programs because they are kind of the largest programs for funding research and innovation at EU level. We also carried out data collection in all 27 EU member states to try to understand what R&I funding had been made available by national and regional governments in this period. And then finally, we carried out an estimate of private sector spend in the EU using an analysis of fractional patent counts. And we've carried out also some qualitative data collection in order to try and frame that within its context, understanding that patent counts really only represent quite a small proportion of food systems R&I. My focus in this presentation, however, is going to be primarily on the public funding aspect. That's largely because, as I mentioned, we're still in the process of finalizing some aspects. So our study was slightly standing on the shoulders of giants, I should say. It was built on 2 previous studies, the first of which was implemented in 2018 by the SCAR Food Systems Working Group, where they looked at levels of public funding in 10 EU member states in a slightly shorter time period. We also built on some internal mapping of Horizon 2020 funding, which had been carried out by DGRTD. Our approach did differ slightly in 2 main aspects. So the first of which is that the definitions that we were using have been refined sort of over time. So they're slightly different and maybe slightly narrower in some areas than those that have been used before. Secondarily, we did try to focus very much on this idea of co-benefits. So really trying to understand how funding was divided across more than one sort of priority or pathway. And what that means is that our final numbers don't necessarily match the preceding studies just because our methodology was slightly different. So next slide, please. So in a nutshell, or in brief, here's a very high level view of our findings. We did notice a positive trend in the amount of funding available at EU and national level for food systems R&I from 2007 to 2020. At EU level, and this one we can be relatively sure of, we identified approximately 4.84 billion that was allocated to the Food 2030 priorities and pathways. This increased quite significantly, both in nominal terms, but also as a proportion of the total budget from FP7 to Horizon 2020. At national level, We identified approximately, actually quite a similar level, approximately 4.6 billion worth of public sector expenditure. However, we do think that's a significant underestimate, and I'll explain why a little bit later. It largely relates to kind of data and monitoring, etc. What is perhaps more interesting, I think, is that although there was significant variation between different member states in terms of how much funding was invested in food systems R&I, overall, the overall amount that was targeted towards food systems really represents less than 1% of overall R&I funding. Next slide, please. So this is just, I'll very quickly run through this. This is just showing you really the difference between FP7 and Horizon 2020, and you can really see that both the number of projects and the amount of funding increased quite significantly over this time. The next slide shows a similar breakdown but maps EU funding against the Food 2030 priorities. I've actually only included this slide for the EU level funding because we don't have much time, but I think one thing that's quite important to see is you can start to identify the influence of EU policy on some of the funding. And perhaps here the biggest shift that you can note is a shift towards circularity and resource efficiency from 2015 onwards in particular. And we assume and suspect that this reflects the introduction of the circular economy package and a focus on that at EU level from that moment forward. I should say, although we don't have the graph, there is an increase also at national level, but with a slight lag of a couple of years, which we would imagine comes from the same level. So next slide, please. This slide is very similar to the one 2 slides ago. It shows the national public funding for food systems R&I. Again, we can see a slight positive trend. I would say the drop-off that we see sort of in 2019 and 2020 reflects the fact that some of those projects, kind of the data hadn't come through yet, rather than us thinking there is a real drop-off there. Just to summarize what we found at national level, in 4 of the 27 member states, no funding was found at national level for food systems R&I, although I should say we didn't include structural funds, and all of those countries did invest structural funds in food systems R&I. In most cases, some expenditure was identified, but this was relatively limited. 6 countries spent less than 50 million, and for the most part, national funding varies between approximately 50 million and 350 million over the reference period. So that's in total for the reference period, which is relatively low. And as I mentioned before, in most cases, we estimate that public expenditure on food systems R&I represented less than 1% of innovation expenditure. Next slide, please. So in terms of trends, one constant that we can see at both EU and national level is that primary production, or the majority of funding is being channeled towards primary production, and this varies between about 60 and 80% of the total funding in each country. We think this reflects the fact that actually in most cases the Ministry for Agriculture is seen as sort of the main stakeholder in terms of food policy and has the most funding to distribute. And again, perhaps linked to that, the majority of funding available, the majority of public funding available is still being channeled really towards universities and research institutions. And that was a constant we found sort of across the board. In terms of priorities, we can see a strong focus on food safety at national level, which I would suspect reflects the regulatory role of government, and a strong focus, as I mentioned, on early stage research, particularly in agriculture. So for example, isolating specific proteins, consideration of soil nutrients, quite a lot of work on animal welfare, etc., etc. We identified quite limited evidence of co-benefits to date. However, I think something that will be interesting to monitor going forward is that in a lot of the interviews that we carried out at national state level, and indeed over the time that we've been carrying out this study, there is a definite interest in Food 2030 and a clear alignment with those priorities, or plans to align with the Food 2030 priorities and pathways going forward. Finally, just to mention that since 2012, we've seen a notable increase in R&I expenditure on waste streams, which we again think is probably linked to the EU circular economy package, and on food processing, which we assume is linked to quite a significant increase that we were able to see in sort of the individual projects on packaging techniques. Next slide, please. So in this very brief run through, we've just identified a couple of obstacles which we have noted with regard to sort of food systems R&I as I say, within the EU member states. The first of these, and I think this is really the most significant obstacle, is we noticed a clear fragmentation at national level. So there's a real division of responsibilities between different ministries. So primarily, as I mentioned, the Ministry of Agriculture, also the Ministry of Research or Higher Education, or sort of that relevant ministry, and then finally, but to a very limited extent in many cases, the Ministry of Economy. There was, in some countries, there is quite a lot of communication between those ministries, but in many cases, the ministries and their relevant agencies do not necessarily always communicate with each other. What we noted was that sometimes one ministry would tell us that another was investing, but when we spoke to the other ministry, they didn't know they were. So I think there is a real problem or a real data gap just in terms of understanding what is going on.
Right.
This links sort of to the second point, which is that sort of fragmentation in terms of a policy focus on food is reflected in a fragmentation of the data that is collected and stored. So what we found was that the data collected is patchy. It lacks a clear basis for comparison. Often, each ministry is kind of collecting data in their own way, using their own sort of techniques, etc. And this means that it's really hard actually to collate, compare, and identify information on outcomes for that data. So that was a big problem with us. The next slide represents this quite nicely. What we can see here is the policies that were identified in different member states. So actually one positive thing for the future is that in 11 member states we identified a specific R&I policy dedicated to food. However, these are quite recent and weren't really in place for the time that we were carrying out our data collection. So we can start to see the impact of Food 2030 at the strategic level, but we're not yet seeing it in the data. I'm looking at the clock and I realize that I'm slightly over time. So if I could just move on to the last slides, I'll run through this very, very quickly. So we identified a few potential solutions at EU level. As I mentioned, I think the Food 2030 strategy or the Food 2030 initiative we can see is already starting to have a real impact on national strategies, and we therefore encourage the EU to sort of further encourage the development of national food R&I strategies aligned with this initiative. We also think that there is a space at EU level, perhaps through one of the expert groups or through the Scar Food Systems group, to develop common outcome indicators and associated metrics, which will make it a lot easier to kind of analyze this type of spend going forward. Final slide, and I'll try and do it very, very quickly. At national level, we think that those that haven't it would be really helpful to develop a food R&I strategy. This really does help to build those kind of interinstitutional links that are needed, and would lead on to increased collaboration between government, industry, and academia. Finally, and maybe this is because I'm a researcher, but we do think that you often don't monitor what you don't measure, and therefore it is important, I think, to focus on some food-specific metrics in terms of data collection and outcome measures. Thank you very much.
Thank you. The constant problem that people are only measuring things which are measurable, right? Unfortunately, ladies and gentlemen, we have no more time. There are questions in the audience. I apologize to people in the audience who pose questions, but I can't unfortunately give the floor back to Kyle and to Carolyn because we have run out of time, we're already out of time. So all I can do is thank Carolyn and to thank Kyle for being with us today and for their input. And I hope very much we can carry on the conversation with everybody going forward. Thank you, Kyle, and thank you, Carolyn. Right, we have to move rapidly on, otherwise I'll be told off by lots and lots of people to the next part of this program. This is all about EIT Food's entrepreneurship and investment program, and a presentation of EIT Food's entrepreneurship activities and showcase of selected rising food stars, which are mature scale-ups, developing solutions that will help transform European and global food systems. We have three speakers for this session. Benoit Buntings, who is the Entrepreneurship Director of EIT Food Portfolio. Welcome, Benoit. Eric Sieber, Founding General Partner at Peak Bridge Ventures. Welcome, Eric.
Welcome, Paul.
And finally, Adelaide Krakow, Head of Climate and Environment Impact at the European Investment Fund. Welcome, Adelaide. It's a pleasure and a relief to see you both, all three of you, because we've had some technical problem in the run-up to this session. So it's wonderful that you're actually all here together. And I think my job simply now is to play traffic cop and move quickly on and invite Benoit to make his opening remarks. Benoit, over to you.
Thanks a lot, Paul, and I'm very happy to be here today with Adelaide and Eric. So, yeah, I think that a couple of important points for me to introduce this panel. To achieve the mission of EIT Food, which is to produce food is to transform, our food is produced, distributed, and consumed, and increase its value to European society. We want to achieve this by solving the biggest innovation challenges through the network of EIT Food partners and working together. And when I say together, it involves obviously all the key stakeholders, including entrepreneurs and their startups. They are really key stakeholders in the network to foster and accelerate innovation. So they are fully part of our community. But unfortunately, we need more entrepreneurs, more startups in the space. We are still lagging behind a little bit today if we compare ag and food to other sectors such as healthcare or energy. And even if, and we'll discuss that obviously today in the panel, the situation has improved significantly over the past, let's say, 4 or 5 years, with much more VC investments going to the sector and more startups created. There is still much to be done to catch up with those other sectors. And that's one of the reasons why at EIT Food, we have not only one strategic objective, focus on catalyzing entrepreneurship, but also one functional area or a business unit, if you want, that is entirely focused on supporting entrepreneurs to launch, accelerate, and scale their agri-food business across Europe and beyond. So we offer basically 3 support programs to those entrepreneurs according to the development stage of their venture. The first one is the seedbed incubator for aspiring entrepreneurs, in which we really identify those diamonds in the rough and we connect them with their customers, our partners, to validate the need and make them product ready. Then we have the Iot Food Accelerator network, which is targeting early stage startups, and where we polish those diamonds. We make them partnership ready so that they can really engage in the marketplace and collaborate with their partners. And then, as you said, Paul, we have this Rising Food Star Scale-Up Association, in which we give exposure to those high-value diamonds that are already having traction with customers and investors and help them to scale internationally. So for all those startups, we offer 3 important benefits. Access to the whole EIT Food network of leading corporates, education institutions, investors, consumer organizations, and so on. But also, we facilitate access to the market by providing services to matchmake them with corporate partners and facilitate pilot projects to test and demonstrate their solution into an industrial setting. And last but not least, and probably the more important for the discussion today, we facilitate access to finance. And then we do different things. We provide direct funding to support the startups. We have done it last year with the COVID-19 Bridge Fund, in which we supported 13 startups with more than 5 million euros to really help them cross this complicated year last year with the COVID-19, where a lot of investment rounds have been delayed or frozen because of the crisis. But we also now fund startups to help them de-risk specific projects, funding proof of concept or market pilot projects with partners. And finally, we also provide investment readiness training to our supported startups. We connect them with the community of investors, and that goes from regionally focused investors, thanks to the fieldwork of our 5 regional offices across Europe, to connecting them with those largest agri-food VC funds, but also the corporate venture funds of our corporate partners. And we have recently launched together with Pigbridge. I'm really happy, obviously, that Eric is here today and will give us more detail about the fund. We have launched together the seed and early stage fund Food Sparks. This is a project that we worked very hard on, and it is now finalized. It has been launched now that we can really better support those entrepreneurs to raise, seed money. But we also have involved in that fund some of our corporate partners as investors of the fund. So Eric will tell us more. The fund is going at speed of light. They have closed at the beginning of the year and already announced 4 investments. And we're really happy to see that most of those investments are in companies that have been supported by the EIT Food programs.
Thank you very much, Benoit. You said at the outset that obviously we need more agri-food entrepreneurs, and it seems to be like the poor relation, as you said, to the health sector and energy sector, and maybe IT more broadly. So, irrespective of all these specific tools that you have here, that you've fine-tuned and developed over time, and working with people like Eric we'll hear from in a second, do you have a sense also why there is this situation? Is it simply because entrepreneurs don't find this sector as interesting and, as to use a rather inappropriate word, as sexy as these other sectors?
Well, I guess that it was probably less sexy in the past than it is today, right? Because there were less possibilities. Probably also the sector was more, let's say, established in the food space. There was less innovation, more fragmented also than maybe in other sectors. But also now there is a big change, and that's why we see so many entrepreneurs coming to the space, that they have access to those new technologies in the fourth industrial revolution, with all the IT tools, blockchain, IoT, and so on, that gives them a lot of opportunity in the digital world to enter new ventures, but also all the different developments in biotechnologies and so on, that really all together gives a lot of more opportunities today to attract entrepreneurs in the space than it was probably 10 years ago.
Okay, thank you very much. And again, to remind the audience, we'll do our best to take your questions during the course of this session. So please post your questions in the chat. And I give the floor now to Eric. Over to you, Eric. And maybe at the beginning, just say a few words about what PeakBridge VC Ventures is all about.
Wonderful. So I prepared a couple of slides to make it more visual. So first, FoodSparks, which is the real topic here, is bridging what we call the seed gap. As we discussed before, also this Yield Lab, there's a lot of companies going from incubator accelerators, but they're too early for VCs. So FoodSparks is addressing on a pan-European basis this seed gap. Next slide. So PeakBridge is an agri-food tech venture capital firm which manages two funds right now. One is the seed fund, but what is really important to the companies that invest in seed is basically to have follow-on funding. So we have also what we call the growth fund, which does Series A onwards. Now, what distinguishes PeakBridge is that the people managing PeakBridge really come all from the food and the VC industry. So myself, I've been 25 years with Nestle, of which 18 years at Nestle's corporate venture fund. Nandav, an Israeli, has created the first food tech seed fund in Israel in 2014. And Yoni helped, that was number 2, creating Fruiterome. He joined it when he was 50 million and they sold it for 7 billion to IFF. And he is actually managing FoodSparks. Now, what is really important to me is in that sector is to connect both the public funding and the RSUs with the private. And EIT Food is about exactly that. And FoodSparks is like the expression of a privately managed venture fund, but that has a collaboration agreement with EIT Food. Next slide. So how does that work? So FoodSparks is a fund that is managed by PeakBridge. We are the investment committee. We take the investment decisions. They are investors that are members of EIT Food, but they're also investors from outside EIT Food. But the cornerstone investor was Givaudan and Paratus, which are members together with Ordway. Now, we have an agreement with EIT Food that we kind of see all the companies and are involved in the mentoring of many of the projects that Benoit just mentioned. So when you talk about Seedbed or the Food Accelerator Network or the Rising Food Stars or the Access to Financing Program, all of this is part of the deal flow into FoodSparks. It's not exclusive EIT Food, but it's part. And therefore, there is a financial incentive for EIT Food. If our fund is successful, EIT Food will benefit of that success. And that's really how we kind of take private investment decisions, but kind of have the public involved in that. Next slide. So just quickly on where we invest, and that's also, again, there was some discussion before about synthetic meat, which we can go afterwards. But what's important in venture capital is that the return invested capital is important. So ESG impact is crucial, but we have to return the capital in order for investors to reinvest in that sector. And therefore, we really invest in scalable proprietary technologies. And before Paul, you mentioned HR and entrepreneurs. It's very interesting now that AI and this tech is also in the food industry. Many of these programmers who did games before are actually very happy to have something more more relevant actually to do, which is what food does. So we invest in biotech, machine learning, new farming, and innovative food. And what you see on the left is all our seed stage companies. On the right side is the Series A companies. And just going to highlight 3 of the companies that we invested in to make it a little more visual. Next slide. So one of the companies we invested, Imagine Dairy. So Imagine Dairy is actually part of the EIT Food fan cohort this year. They do basically what Perfect Day does, but in a cheaper and faster way. So producing whey protein out of recombinant yeast. Next slide. Orbix is in waste, and as you know, waste is 1/3 of the food is wasted. So waste is a really big topic. So this is actually a co-investment with EIT Food. So Benoit and I basically co-invested into this company, a Dutch company working on the food saves part of food waste. Next slide. And this is Mediterranean Food Lab actually won the top prize of all the accelerators in 2020. And what they do is they address the taste and texture of plant-based food. And we all have seen that Beyond Meat sales is not progressing as much as people expected. One of the issues is always taste and texture. And this is a company using completely natural fermentation to improve basically plant-based texture and taste. And just a couple of the examples. So we have done 5 investments. We do 1 a month. Usually we have about 3 term sheets outstanding, and we're looking forward to working with the EIT Food to make that happen.
Question: you're the brains behind your Peak Bridge. What kind of vision did you have at the outset, and how almost surprised have you been about the success of what you've rolled out over this period since Peak Bridge was first founded?
Right. So we have two things to that. One is our thought and our look in the world is that companies at the end of the day start locally, right? They start in Wageningen and they start in Barcelona, and that's you need a local network, and that's why our goal is actually to have seed funds regionally. So we have now Food Sparks in Europe and Israel, but we'll also have one in the US later on in Latin America. And then you have to have the follow-on investment where you really can invest 5, 10, 20 million to take this company and make them success. So that's one of them. Also, when I left actually the Nestle Corporate Fund to create my own company, because I saw that this, let's say, industry 4.0 is finally arriving into the food, and that you can now have scalable investments which make the venture capital approach valuable. So for example, we don't invest in real agriculture because farmers take a lot of time. It's a very important sector for impact, but it's hard for venture capital, and we don't do the B2C for the same reasons.
Right. Okay. Well, it's fascinating. More questions, but I'll stop for a moment to give time for the other people taking part in this discussion. So moving now over to Adelaide Krakow. Adelaide, over to you.
Good afternoon, and thanks for having me today. As an introduction, I thought I would present the European Investment Fund because it may not be familiar to all of you. The EIF is basically a European public institution that is part of the European Investment Bank Group. Our central mission is really to provide access to financing to European ventures and companies. We manage and invest resources on behalf of our shareholders and stakeholders, which include the European Commission, the European Investment Bank, EU member states, as well as private institutional investors. I would maybe go to the next slide because I think it gives a good overview of how we're structured. So basically, we channel these resources to startups and companies by partnering with financial intermediaries such as venture capital and private equity funds that really have that necessary proximity to market to identify innovative and high growth companies and support them with expertise in addition to capital. To date, and over the last 25 years, we've invested about 25 billion euros in close to 1,000 venture capital and private equity funds across Europe, which in turn have backed thousands of companies active in different sectors and stages of company development. Well, through our investment activities, we've also become the largest provider of equity risk financing in Europe, helping to finance innovation and further the growth, of course, of European enterprises. From our standpoint as investors and policymakers, generating economic growth and value, however, is not enough. And over the last decade, the repeat financial crises, the climate environmental emergency, and the pandemic have all raised fundamental questions on how we live and how financial markets can, support society, generate positive impact, and ensure the sustainability of our economy and planet. If we move to the next slide, please. So the EIF has been an early mover and a long-standing investor in the impact space, with our first investment in a climate fund dating back to the early 2000s. We're considered amongst the most active fund-of-fund investors in climate environment in Europe, as well as the most consistent, as we've continued to support the sector through its various cycles of development and through its highs and lows. To date, we've channeled about 1 billion euros to climate environmental VC and PE funds across Europe, and have also helped to catalyze a further 3.4 billion euros from third-party investors. Within the next 2 years, we hope to accelerate our investment and more than double that amount, reaching 2 billion euros overall. In line with the development of the market and our own activity and policy goals, what we understand as sustainability has evolved over the past years. Climate environment, as I think everyone here understands, isn't really a sector or industry in itself, but it's rather an aggregation of overlapping verticals and investment themes that have high climate environmental content and value. As such, our understanding of the activities, technologies, and products and services that really fall under climate environment is very broad and covers everything from energy, transport, and mobility to the circular economy, waste management, green chemistry, and of course, the agri-food industry. We're really active across the funding continuum, so from proof of concept financing to growth and expansion capital. We believe that it's just as important to finance the scaling and development of climate environmental solutions that exist today and that can have an immediate impact, as well as the research and development of game-changing innovation technologies that are, of course, needed for the future. Given our mandate, we also have a clear European focus, and currently about 75% of our fund commitments are earmarked for investment in Europe. And finally, one last and very important point that I'd mention is that we embed impact in all of our investments. We've been one of the early promoters of impact measurement, having developed our own methodology and framework, and that we're presently systematically rolling out to all of the climate and environmental funds that we back. Thanks.
Thank you. Again, a fascinating outlet. I think a theme of this session, one before, is how do we match up, how we make sure that the investors meet up with the people who need the investment, and how once they've met, how they connect. Because it seems to me that the scientists aren't in the financial markets, and the investors are not scientists, all respect to the finance people. So, from your point of view, Adelaide, how does the EIF go about? It's not a question of spotting winners, because by definition, these people need investment at an early stage of their existence. So, what is the method? Is there a methodology for the EIF to try and identify where they should invest?
Well, basically, as I mentioned, we operate through an intermediated model. So we don't actually make direct investments ourselves, but rather we partner with, fund managers and financial institutions that are, again, present and on the ground in the market and are really seeing enterprises emerge, innovation happening. We rely on them and on their judgment and expertise to really identify those companies that are, again, developing game-changing innovation and that would require, further financing to develop and scale. So essentially, we don't assess the underlying investment opportunity or company, but rather we look at the fund managers, their strategies, and see if that constitutes a fit with our policy goals and whether we feel that they will be the adequate partners to support these companies and provide them with financing.
Right. And is the system working well? And I'll be very blunt, because obviously you gave a very positive picture, rightly so, of how you operate. If there were to be on the panel now somebody wanting investment, would they, a bit like European funding, would they be possibly complaining not about you, but broadly speaking, the ecosystem of how difficult it is to access this fund? Or is it a relatively stress-free, hassle-free system?
Well, again, we don't actually influence the investment decisions of the fund managers we work with. It's They are independent operators and are executing on the strategies that they've devised. We are not the only LPs in this fund, obviously, but we do strive, to make connections, of course, with between the funds that we back and eligible companies. So we will, act as how would I say, as an introduction. Right. And, as we'll probably talk about later, there are other initiatives we're working on that we hope will help to build this community and bring together all the stakeholders of the agri-food industry, including entrepreneurs, investors, and corporates.
Right. Okay. I'm going to give priority to questions from the audience since the last session we ran out of time. So I'm going to go straight to questions in the chat. And the question from Ksenia Chekina, I'm sure I pronounced that wrong, Ksenia, researcher at CUT. Questions as follow. Investment always means giving away some shares of a startup. Do you, I'm not quite sure the question is addressed to, but maybe all you can have a stab at it. Do you have a network of business angels who support specifically the food sector? Who would like to answer that question from Ksenia?
I can, if I can start. Okay. All right, thanks, Paul. So, yeah, first of all, I'm not sure the first part is a question or a statement. So, investment always means giving shares away in most of the cases, right? But there are also different tools that we are also putting in place in our case at EIT Food for some specific startups that are already generating or planning to generate revenues at a short term. We're also now putting in place new schemes such as the revenue-based investing scheme, where the startups is not giving away shares, but pay basically a certain or share the value of the company when they grow their sales, basically where they grow their revenues. So there are different opportunities and models that are now tested, and we also test at EIT Food. And about the network of business angels, in most of the cases, obviously the business angels networks are more local. So as I say, we work directly with them through our 5 regional offices that are based in different countries in Europe, and connect the local networks of business angels with the early stage startups. But we also now start a collaboration with the EBAN, right, the European Network of Business Angel. That is also something where we can definitely contribute to connect them with early stage startups.
Thank you, Benoit. Anybody else like to come in on that? Adelaide.
Just to mention that actually the EIF has a specific business angel program, because we obviously understand that business angels are an important component of the investor ecosystem. And so through this program, what we're doing is basically matching the funding provided by business angels to startups. So it's on a 50-50 basis. We do have a few business angels that we work with that are specifically targeting the agri-food tech space. So that's a program that we've supported in order, again, to enhance investment from business angels.
Right. Okay. Eric, do you want to come in, or shall I move on?
Yeah, sure. So, I mean, business angels is also the definition. Some people think these are people who put in 50,000, but they're single family offices, right, who can write checks of 10, 20 million. So what we do is many of these single family offices are actually invested with us, and then we co-invest together, meaning we invest first, and then when we go to Series B, C, they actually continue investing as basically a single family office or business angels, as we call them.
Okay, thank you. We had a question in the last session as well about the taxonomy from Christoph Bexi, so I'd like to maybe develop now, maybe ask the three of you to address it. As you know, both finance and innovation are expected to make a positive societal impact. Generating economic impact is not enough. Last year, the Commission has developed quite a controversial taxonomy for sustainable activities, giving companies and investors definitions of what economic activities can be considered environmentally sustainable. What is your definition of impact, and how do you measure it, each of you? Who wants to have a stab at that?
I can start, maybe.
Please, Eric, go ahead.
Yeah, so we have been from creation be part of the UN PRI, right? But now with this new regulation that the EU drafted, which has Article 6, 8, and 9, basically all investment managers have to make a clear statement. And while I'm not a big fan of regulation in general, I think this regulation against greenwashing actually does make real sense. So we have decided for our next fund that we will subscribe to Article 9, which means you intentionally have to do impact investing as part of your fund. You have to measure it. You have to audit your measurements by one of the big four, and part of your performance and remuneration, so carry, is actually linked not to ROI, not only to ROI, but also to these measurements. And I think that's a fantastic way of combining both financial and impact measurements in a very systematic process that is also transparent to all the LPs.
Thank you, Eric. Anybody else like to move in on that? Adelaide, go ahead.
Sure. No, so the EU taxonomy is indeed a very ambitious initiative that really seeks to provide a framework to define what activities, can make a substantial contribution to EU's climate and environmental objectives. But as the Commission itself has acknowledged, the taxonomy is still a work in progress, and not all activities as of yet have been covered. So, the taxonomy is really intended to be a living document that will be evolved and expanded over time. As Kyle and Eric just alluded to, impact has become really a buzzword. It used to be a bad word in the past, now it's a buzzword. And it can lead to a very superficial understanding of what impact is, or even greenwashing. If we really go to a more generic definition of what impact investing is, it's an investment approach that seeks not only to generate profit, but also to have a positive and measurable impact on society by investing in businesses that really at their core are striving to resolve fundamental climate, environmental, and social problems. We, very much along the lines of what Eric just mentioned, we're really striving to enhance the impact of the companies that are supported by EIF resources, not only, of course, providing them with adequate capital for development, but also by introducing impact measurement, again, in all the funds that we invest in. So as I mentioned earlier, we've been early promoters of impact measurement, and we've devised our own impact measurement methodology over 10 years ago, which it basically was conceived in the context of our social impact activities and now has been systematically implemented in our climate environmental funds. So all of the investment funds that we're supporting under climate environment really need to incorporate a clear sustainability angle and pursue investments that have a positive and climate environmental impact again. We really require our fund managers to define, together with their company founders, impact indicators and objectives for each portfolio company that can be tracked and measured over time. The indicators and objectives, have to be relevant to the underlying business and also feasible to attain over the time, the fund will support the company and its holding investment period. And ultimately, the achievement of these impact indicators at the portfolio company level will translate into an aggregate impact performance at the fund level. And again, beyond measurement and reporting, and as Eric also explained, we ask that a portion of the manager's carry or economic incentives be really tied to impact achievement in addition to financial returns. And so this really ensures a strong alignment of interests on impact objectives. Typically, the percentage of carry that's linked to impact is around 50%. It can, of course, vary depending on the individual funds. Some of the VC fund managers that we've worked with have initially been hesitant about adopting impact measurement and certainly sensitive to tying a part of their carry to impact achievement. They have since, though, come full circle, I would say, and are amongst, the most avid supporters. Many of them have shared with us that the framework has really helped them to live and breathe impact, better articulate their investment strategies, and make sure that they're making meaningful and impactful investments. They've also enabled the funds to attract a new set of LP investors that are, really seeking impact alongside financial returns. And by, asking their company founders to expressly state their theory of change and impact objectives, these companies themselves are able to, again, better communicate their value proposition to their stakeholders, sell their products and technologies to customers, clients, and investors. So really, all in all, we think that it's a win-win for everyone.
There you go. Okay, thank you. We've been talking a lot about startups, but also there's a very good question from Giovanni Colombo, EIT Food, home team, about the pre-startup phase. So the question is as follows, and I presume it's addressed to you, Benoit. how does the EIT Food scout for the aspiring entrepreneurs to feed this incubation program? How do you get in touch with the owners of good research ideas which have business potential but have not yet created a startup? Interesting.
Yeah, good question. Thanks, Paul. So yeah, we well at the EIT Food we have first of all a set also of very important entrepreneurship-based education activities. So we are supporting learners at different levels, PhD students as an example, to also get more, to get trained around entrepreneurship and to help them then to move forward with their idea, maybe to launch a new venture. So that's we have such projects and programs at the EIT Food. Now within the business creation area, we have this seedbed incubator that is implemented by many of our partners across Europe. So we have partners in different European countries that locally also in charge of identifying within their own environment. So it can be universities, research organizations, those entrepreneurial teams developing new IP, new knowledge that could be transformed into a solution that in the future could be obviously developed as a product and service to help us transform the food system. So we really rely on our network to identify those future gems. But important also to mention that all the programs at the EIT Food are totally open to everybody, and that we also have obviously those communication campaigns to make sure that everybody with an idea, with a business idea that would expect to receive support from us, is obviously free to apply to our program, and we open those application process at least once a year, usually at the beginning of the year, so that everybody has a chance to apply and to enter the selection process.
Okay, thank you, Benoit. A question from Alexander Berlin at Future Food and Smart Cities. His question follows. Another trend we are seeing is that many scale-ups in Europe tend to foster ecosystems like Asia and the US. How can we tackle more large-scale project investments that bring technologies in application? How can we engage also more exits, is that the right word, by leading European food corporates? Is that question want to be tackled by any of you on the panel?
I can start.
Eric.
Sure. So first, what we see really, and we invest also in the US, is that Europe has amazing technology, as they say, right? It's really a hotbed of technology. But both the entrepreneurs and the way that Europe is, right, with French country, English country, German country, which each country is still kind of different. The scale up of global rollout is more difficult. So what we do a lot is actually help European companies to go to the US. For example, Nix, which is a Swedish company we've invested, they do indulgent ice cream without sugar, low GI. They're a Swedish company. They do roll out in Europe, but now they go first to the UK, then they go to France, then they go to Germany, and each one is a market where you need a team and a language. We help them to go to the US, and in the US they can scale up in one go into 300 million customers. I think this is an advantage and disadvantage of Europe. It's more diverse. Once you are in all of these markets, actually you have a barrier of entry. This other cannot come in, but it does take more time. So my answer would be it's really something we have to work on. And but the technology of Europe is top notch, and I think has nothing to envy the US.
Okay, Benoit.
Yes, to add on that. Sorry, Adelaide, do you want to go?
No, I think she'll let you go first.
Okay, so just to add on a couple of very interesting data, I will not go into obviously details, but there are some interesting data that have been collected by AgFunder about the situation in Europe compared also maybe to the situation in the US and in Asia. And those data are very fresh, right? Because they come from 2020, so last year. And I can tell you that today, the total investment, VC investment made into startups in Europe are still 3.5 times less than in the US and 2 times less than in Asia. So there is still obviously a room for more investors and more money to be invested in those startups in Europe. What is more important, even I think for me, is that if you compare the average deal size in last year also in the food tech space in Europe compared to what you see at the world level, it's about the same at seed stage and Series A stage. But when you go to later stages, there is a difference of up to 5 times. So it's the average deal size for later stage is 5 times bigger at the world level than it is today in Europe. So we need also to make sure we can cope with that difference. And I believe that we at EIT Food, also with our partners, can contribute to reduce this difference, increase the deal size in later stage rounds. And how we can do this, I think that one element of answer would be to have a better collaboration between the different investors and the different stakeholders in the ecosystem. So with our pan-European ecosystem at EIT Food, we can play an important role to increase collaboration, foster syndication between the different investors, facilitate co-investments between those corporate investors, those VCs, and I think that there are a lot of things to do. And we're very happy also that we are now working together with the EIF on a project where all those stakeholders in the ecosystem could be working together. Maybe Adelaide, you want also to touch a word about that project?
No, cue to you, Adelaide. Over to you.
Sure. I mean, I think that the agri-food industry, is strategic at a global level. I mean, obviously, it feeds the planet, it serves basic human needs. It's of economic relevance, employs just about half of the global workforce. So it's not surprising that it's getting attention from, investors across the globe. As Eric mentioned, European innovation is top notch. The magnitude of the market opportunity here is great. And although, again, VC investment is on the rise in Europe, it's certainly lagging in comparison to the US, as Benoit just highlighted. And there is clearly scarcity in the mid-stage segment, which is, the one that is pretty critical in terms of scaling innovation. So we, as a European institution that is seeking to provide access to financing, feel that it's important to fill this gap if we really want to, promote European innovation, retain talent, build global leaders, and really support, the European agri-food industry. So we're working on different initiatives. Benoit touched upon one. As we've done in other sectors that we felt were underserved in terms of capital availability, namely the life sciences sector, we are seeking to set up a fund initiative that would allow us to attract more private capital to the industry. We know that there are a lot of institutional investors out there that would like to access, the sustainability in general in the agri-food industry in particular, but they're either too large or they don't have the internal resources or expertise to invest directly. So what we did in the life sciences sector, and that we'd like to replicate in the climate and environmental space, is set up this fund of funds where institutional investors can invest, and that is managed by the EIF, and then targets, investments into funds, which in turn, of course, ultimately invest in hundreds of companies across Europe in different policy or strategic areas and in different stages of development. So it really enhances their access to the market and these investment opportunities. Beyond the capital, however, and again, as Benoit mentioned, we're really seeking to build a community, a platform that can bring together the stakeholders of the industry. So entrepreneurs, investors, corporates, where they can share market knowledge, they can build connections. We can, introduce startups to investors that are seeking investment opportunities, and corporates, of course, that want to forge strategic relationships, access innovation, or even acquire it. So again, we've done this in life sciences with EIT Health through the Venture Center of Excellence, and it's something that we'd like to also do in climate environment, and we're in early discussions, of course, with EIT Food to work on that. Apart from this initiative, we ourselves, of course, really want to ramp up our investment activity in the agri-food space, which has been a very dynamic sector for us. By the end of next year, and based on the pipeline of opportunities we have, we expect that we'll have committed 900 million euros to funds active in the agri-food space. We're also really striving to build up, I would say, a well-functioning VC ecosystem that can support agri-food startups, from start to finish. So really from early stage innovation to, again, expansion and growth. It is a nascent market, so the investor landscape is still sparse. But we are seeing a lot of new and emerging teams coming out, many of them spinning out of corporate VCs or other tech firms or coming from the industry, which we think is quite valuable. As first-time teams, however, they can struggle sometimes with fundraising. So there we really want to step in as anchor investors and make meaningful and strong commitments that range from like 10 to 50 million euros. And again, as a public institution, yeah, sorry?
I'm sorry, I have to cut you off. A few more seconds, then please wind up.
No, sorry. And of course, as sort of anchor investors, and public institutional investors, we're seeking to promote best practices and also attract and catalyze, third-party investors. So referencing and also introducing these fund managers to other prospective LPs.
Thank you. Sorry to cut you off, Adelaide. The next session is starting right now, and you heard me at the very beginning of this session refer very briefly to something called Rising Food Stars, and I've been asked by people at headquarters to ask Benoit to very, very, very briefly explain what Rising Food Stars is before I pass on to the next session. Over to you.
Okay, thanks, Paul. Happy to see Rising Food Stars in the next session. So the Rising Food Star is an association within EIT Food of today 70 of the high potential scale-ups that will be the game changer of the food system of tomorrow, developing innovative solutions in the 6 focus areas of EIT Food, from alternative proteins to sustainable ag. So those startups are fully part of our ecosystem. These are companies that are ready to scale, that receive support from us, can collaborate with our partners, and are really the startups to watch in the food tech and ag tech space for the coming years.
Fantastic. Well, we'll hear from 3 of them in the next session. We've run out of time, as always. There's so much more to say, so many more questions to field from the audience. So my apologies to all you in the audience. Didn't get your questions taken, but maybe next time. Before I disappear, I'd like to thank Benoit, Eric, and Adelaide for your interventions and making the time today. Very much appreciated. Thank you very much for a great discussion. And my final task, very pleasant task, is hand back to Jennifer Baker. Over to you, Jennifer.
Thanks very much, Paul, and indeed to the panelists and everyone in the audience for all those questions. It's always the same. We get so much questions. People are so enthusiastic, and we don't have enough time to actually solve all the problems. But I will say that you can please keep using the networking opportunities to talk to your fellow attendees and maybe find out more information and ideas that way. We're going to wrap up now. We're going to come back in just a moment with a discussion about protein diversification challenges and opportunities to scale up impactful solutions in Europe. So don't go far.